Was Cathie Wood's decision to sell all her Chinese stocks at the bottom good, even though she bought all her stocks at the top and she lost a lot of money? Let's get into it in this video. Hello everyone, welcome to Just Invest Today, and today we're talking about Alibaba and Cathie Wood. She's selling all her Chinese stocks from the crackdown and what happened during that whole decision. And we're going to hear some of her words, some of the things she did. Is Cathie Wood Arkk portfolio going to be going crazy in the next few years? We're going to see. We're going to get some different perspectives. I want your opinion on this. What do you think about Cathie Wood's decision to sell Chinese equities? What do you think about her fund? Is this going to be a good 5-10 year hold? Right? So let's get into this right now. Guys, can you like this video, subscribe to my channel? I'm on the road to 1,000 subscribers. Can you help me out? Thank you. I'm going to provide so much good content for you guys, man. So as the clampdown happened and everything was going around with Chinese stocks and all the uncertainty happening with companies in China, Cathie Wood decided to sell all her stocks, or majority of her stocks. She sold JD.com, PDD, Alibaba, Tencent, even though she loves the innovation over there because that's what she's all about. So she now has 0.32% of 23 billion assets invested in Chinese companies compared to the 8% in February. So that's what you see, and that's the sale of all her Arkk fund, right? So Arkk Innovation, guys, has recently been cutting exposure in Chinese tech because of the Beijing crackdown. So this is Cathie Wood's words herself. Well, I would say in any of these areas that we're looking at right now, the multiple structure and valuation structure of these companies is down and probably not going to come back very quickly, may even go down more. See, and this is her mindset, guys. Think about what she's just said right here. Her mindset is very short term. So she bought at the top, right? And then she sold at the bottom because think about it. She is so highly sought after. People are watching her every move, so she needs to make money very quickly, short term. People have to see her progress because her portfolio is right front and center. So she understands that if this goes down for another 3 to 6 months and it doesn't come back, I'm gonna have some crazy losses, guys. And that's what we're saying. We're not looking at that. We don't care for that. We care for 4 to 5 years. We can have bad gains for a year or two, but then over a 5-10 year period have like a 30% return because we're able to stay down solid. We're not trying to bid up these stocks. We're not trying to get these stocks to blow up. Who cares? Think about it. If Alibaba goes to 300 today or 400 today, are you just gonna sell it? We're planning to hold these companies, so even if it doesn't move for next year or two, it's okay. They're still buying back shares at a cheaper price. So just buying billions of shares at a cheaper price. So it's not that bad of news, guys, if this happens or if Cathie Wood sells. But we have to understand her mindset. She has to make short-term profit for her shareholders to prove that she can still do this and still have a strong, lasting portfolio. But she's like, I'm sure I'm going to find some very interesting companies in the innovation space, and so we're going to keep our open mind there. So she understands that China is growing, China's GDP is growing like crazy, so her mind is still open to invest in these companies when she sees some kind of certain regulation solid in China. But guys, by that time, I think it's going to be too late for her. That ship is gonna sail. She's the type of investor that she needs perfect information. And guys, in investing, perfect information is not always there. You gotta take some chances. And that's what investing is about. If you want 40-50% gains, you have to understand that there's gonna be mispriced, misunderstood opportunities, a lot of uncertainty in the market. When that happens, when you make those type of gains, that's how you make those type of gains. Or if you just want those 5% gains, just go invest in the S&P if that's what you want. So you have to understand your position. And look what happens. This guy's saying Cathie Wood's Arkk portfolio is actually fundamentally overvalued. So people are still assuming that her portfolio is overvalued, even though she's saying there's no market bubble. It's a function of price. And investing price has to matter, and fundamentals have to matter. You see her Arkk innovation portfolio take at least a 25% dip, and this might continue going into the future because a lot of stuff is just stalemate right now, right? And look at her top companies: Tesla, Teladoc, Roku, Coinbase. Like, these are just like, I feel like these are just like boomer stocks, man. And this is where she has most of her money, because this is all innovation, guys. So do you think her portfolio is overvalued right now? Like, look what some analysts or some Bloomberg people are saying. The fundamentals are overvalued. A lot of these stocks have crazy multiples, and they're not even making money. And how they're making money, like, there's so much questions, man. Even her Robinhood purchase is like questionable, and that's dipped already like 40-50%. So you see how her portfolio is moving. Maybe she just wants people just to have inflows, and she just wants to be known. But do you think Cathie Wood is a good investor, bad investor? Do you see these returns actually making a comeback 5-10 years from now? She's gonna kill the market, kill Michael Burry and all those naysayers, maybe like me. Tell me what you think in this video, guys. Guys, if you like this video, like it, subscribe to my channel, and I'll get back to you in the next video. Peace!